What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started. So today we're talking about a SPAC that Jim Cramer thinks is a steal under $20. EVs and SPACs have had an amazing year in general, but not all SPACs get endorsed by Jim Cramer, so this is a big deal. Without further ado, the SPAC I'm referring to here is PIC. This SPAC is merging with XL Fleet. So as you can see, the stock has shot up after Jim Cramer announced that you should be buying this stock under $20. It's gone up almost 10%. So fingers crossed, we all get a chance to buy this under $20. I think this could double or even triple from here before selling after the merger. We all know SPACs generally sell off after the deal is closed, so that can be one way to play the stock. So anyways, let's see why Jim Cramer thinks this is a good deal. But first, let's see what they actually do. Now this is directly from their website. Traditional gas-powered commercial fleet trucks perform critically important work, but cause more pollution and burn more fuel than any other vehicles on the road. It's a complex problem, but we take a simple approach to making those same vehicles cleaner, greener, and more sustainable. Both our hybrid and plug-in hybrid technologies transform a factory OEM vehicle into a more fuel-efficient hybrid by adding an electric motor, an advanced lithium-ion battery pack, and control software. No other significant modifications to the vehicles are required, and no changes are made to the internal combustion engine or transmission. So basically, they take popular vehicles and convert them into a hybrid or plug-in hybrid vehicle without having to structurally change the vehicle too much. And they claim that the performance of these vehicles remains the same, which is an important aspect. So they're technically not having to create new electric vehicles from scratch, and this is good because that takes a long time, and using this approach means that they can start making revenue straight away, rather than having to wait a few years before they are able to mass produce their vehicles. So this merger will value XL Fleet at $1 billion, and the company will have $350 million net cash and $150 million from new strategic investors. If you guys have bought SPACs before, you know the ticker symbol changes after the merger. In this case, it'll change from PIC to XL. One main reason why Jim Cramer was excited about this company is that unlike all these other SPACs, XL Fleet already has multiple deals with major companies. So some of these companies are FedEx, Pepsi, and Verizon. As mentioned before, this company is different from its rivals like Lordstown Motors, for instance, because they don't make their own vehicles. Instead, they outfit existing commercial-grade trucks from the likes of Ford and General Motors. So according to them, the total addressable market for this sector is around $1 trillion, which is huge. Right, so now let's see what Jim Cramer actually said about this company, and then I'll tell you about my strategy for this stock. So this is what Jim Cramer had to say about this company. With Pivotal Investment trading at $15 going into the XL Fleet merger, I think the stock could be a steal. The Mad Money host said, but if it starts flying next week, I'm begging that maybe you don't chase it too much past $20. XL Fleet plans a fully electric system by 2022. It's coming public in a year where a flood of companies are coming public via SPAC deals, especially electric vehicle producers and related companies. The company is projected to bring in $21 million of revenue this year, which it expects to grow to $647 million by 2023. Now this is the bit I personally like. What really sets XL Fleet apart though is that unlike most of the electric SPAC plays, its products are already on the road, Cramer said. XL Fleet's a little different in that near-term forecasts are much more substantial than what you see from most of these SPAC names. Then he goes to say the following: I've got to tell you, if XL Fleet can even get close to hitting its forecast for 2022 and 23, and we get some clarity on that relationship with Ford and the F-150, this stock is cheap, darn cheap. Cramer said XL Fleet would be trading at just 3.3 times its 2023 forecast. So what exactly am I going to do with the stock? What is my strategy? Personally, if I can get my hands on this under $20, I'm going to sell half of it at around $35. I think this stock can go up 3 times easily. But I'd really want to lock in some profits past 35. The fact of the matter is, no matter how you look at it, there's just too many SPAC plays out there, and not all of them are going to make it in this EV industry. So you have to lock in profits where you can and diversify your portfolio where possible. So that's it for today's video. I hope you enjoyed it. I hope you found some value in it. If you liked the video, please subscribe to the channel and like it. It really helps with the YouTube algorithm. I hope you all have an awesome day, and I'll see you in the next one.